Good afternoon, folks. Just a quick little review. I'm doing it this way to save myself some time. So it is what it is. All right. So this morning, I live streamed and outlined a lot of things. You can go watch the live stream. I added it to the 2025 mentorship playlist, as this will be a part of that playlist as well. So I covered the Monday, Tuesday regular trading hours, opening range gap. You can see how we use that later in the day. Rallied. So I'm going to strip these things off as I mentioned them, just to clean up the chart. And this premium wick, these gradient levels here, 24, 8, 11 and a quarter, it's right behind this line here. Okay. So that's the close of that candlestick right there. And then the lower quadrant comes in at 24,852 and a quarter up here. And then 24,893 and a half, consequent encroachment of this wick. That's this level up here. You can see how we worked around that level. Sent it up into 24,934 and a half. That's the upper quadrant level. And the high comes in at 24,975 and a half. You can see that delivered here in the afternoon. So I'm going to take these levels here and I'm going to, just for completeness sake, I'll show you this. $913.75 is respecting it there. 24,895 and even. The body's respecting it there. So you get more bang for your buck by having it on the larger as I gave you for the rules, okay? So I'll take that off now. And I showed you the opening range gap for today. That's all this business in here. And back in here. The details for the low I gave you, outlined it all live. Engineered sell side liquidity here. It drew up into the levels I mentioned that it would likely do. And we'll take the new day opening gap off. And the Friday to Monday regular trading hours opening range gap, we'll take that off. And the quadrant levels, we don't need them anymore. And once we ran the sell side here, the liquidity was the old buy side. I mentioned at the beginning of the stream, I like those smooth highs. Right in here, we have a inversion fair value gap. And this consequent encroachment of this wick right here, price comes down, hits that. So it's allowed to go outside of the range that is the inversion fair value gap. The wicks are allowed to do the damage. How far can they go, Michael? Consequent encroachment of the longest wick. Don't use this one. Don't use that one. This is the longest one. So consequent encroachment is right there. Rallies up. We have another inversion fair value gap there. Beautiful delivery to the tick there and rallies up. Now this blue line is that old relative equal high I told you at the beginning of the stream. And these are the quadrants for the rear trading hours opening range gap for today. So we have the lower quadrant, consequent encroachment, upper quadrant, and then the high. that off. First presented fair value gap is on candlestick 931, and I have the gradient levels on that too. But we'll just use the, actually, let's just do it. All right, so we have the buy side balance, sell side efficiency, first presented fair value gap, lower quadrant, consequent encroachment, inversion fair value gap, and that comes right in with the inversion fair value gap in upper quadrant of the first presented fair value gap. So you see how there's a confluence of several layers of things supporting price for a discount. So discount sensitivity, these are the things I have on my piece of paper. Okay, and as new PD arrays form, like this one here and this one here, and when the first presented fair value gap forms, if it's a large enough one and it affords me to put the fib on to get the gradient levels on it, I'll get those and I'll write that down. Okay, so my little piece of paper pad, it's these things I'm writing on it. Okay, I start the day off with what I showed you this morning. Now, not just that, but that's what I'm doing. I'm looking at previous opening range gaps in the last 3 days. I'm looking for inefficiencies. I'm looking for daily wicks, premium and discount, in how the market would use that information. And I want to go back and show you something here. All right, so this London low right here. Why did price tank right there? Any idea where you think that would have pulled down into that? Right here, that level. Now, classic support and resistance guys, they like to look at things like this. They'll say, "Well, clearly ICT's behind the times, and he doesn't know about support and resistance." So this old high here, okay, it broke through that. So naturally, they would expect it to be support here, but you can see how well that worked. It just ripped right through it. And then the market rallies up. I'm sorry, opens here, rallies down, back down into that level. But look, it goes a little bit past that. See, that's the thing that plagued me all the time as a young man. I didn't like that. Okay, I wanted to be a little bit more precise, because if it was in fact the theory behind why price should move up and down, then it should be a lot more sensitive than this. This looks erratic to me, and it looked very erratic to an obsessive compulsive and younger man that I was back in my 20s. So now let's go in and look at the smart money concept of my fair value gap. So if we look at this candlestick right here, okay, this candlestick on September 19th, the opening price, you're going to look right up here, okay, upper left-hand corner, 24,717.75, okay? So just remember the last two digits, 17.75. Is it higher or lower if I go to the previous candle's close? So 17.75, and the close of that previous candle, I can't remember if I said open or close. It's this candlestick's open rather, 24,717.75, and then the close of this one. And it's 713.75. So there is a volume imbalance, okay? And you might see this with better younger eyes and say, well, that's obvious. To me, it's very hard to see that. So I have to check my math sometimes here. I've been guilty of putting volume imbalances to the wayside, not noticing that they're there because I'm trying to go through the material quick and get through it. So here's the bullish fair value gap, okay, a buy side imbalance, sell side inefficiency, and here's the consequent encroachment of that level, okay. So if we roll that forward into today, that low right here is that low right there, and that is what I found as a better form of what would be considered quote unquote support or resistance, not viewed in the same light that a retail trader would expect it. They would not consider that. But because smart money concepts are better than that archaic nonsense of retail support resistance, you would expect that. So it dives down into algorithmically right into the middle of this fair value gap. Again, we're not support. We're not support resistant, and we're not supply and demand. We cut through all of these candlesticks and go right back to that level right there of the fair value gap. And the consequent encroachment of that level takes us right to that level right there. So not only did I give you the New York session low and told you it's what it was, this is how you can see the London open low. Okay. And then you roll this information into what I was doing in Forex when you watch me run those accounts up into astronomical levels real quick, boom, 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 and show my executions and all that, just too perfect. It's because I was using this stuff here. Okay. When I'm using this information and I'm dialed in and I have no reason to be talking about anything because I'm just focusing on trading, it's just it's poetic. It's just beautiful. It's just like, well, it's art. And when you get better at this, and don't expect to learn how to do this real fast, don't expect to be real quick about it. Okay, take your time, learn to find yourself in this, and view it as a form of meditation. When you go through your charts and you look through old PD arrays and try to see what rhyme or reason there is using the language I've given you, you will get more and more insight every time you do it. If you're someone that's going to be lazy, and I don't mean it derogatory, I mean it in a way where if you're going to be lazy and don't spend that much time in doing it and don't find time doing it and enjoying it, it's going to be real hard for you to get better at it. It'll feel like it's just outside your reach all the time. And I don't want you to feel that way. I want you to find enjoyment. Put some really nice, relaxing music on and just simply go through your charts and annotate them, really mark them up, and really cherish the idea that these concepts keep repeating and there's something that you can learn, and they're very, very precise. Daily highs and lows, it's never been a problem for me. My more mature veteran students, they're getting better at it, and you'll get better at it too. You'll learn how to do it, but you only need to get the meat in between. You don't need to get the lowest tick low and the highest tick high, but the draw on liquidity, as I mentioned this morning, it could create an all-time high. It could, and it did. Relative equal highs. Here's your high right there, and it ran up there and pierced it. So 25,027.25 got blitzed with a high today at 25,036.75. And it looks like it wants to make a little bit more of a ramrod through that the way we opened up here. So it's usually indicative of them wanting to maybe flirt with a little bit going lower and just send it a little bit higher again. Okay. I wouldn't be trying to chase it here. Just wait for regular trading hours tomorrow and see how they open up, if they give us a discount or premium gap, and use the information like I showed you today. I had fun today. I hope you enjoyed it. And until I talk to you, I guess tomorrow, Lord willing, be safe. I'm not going to do anything with Forex because basically it was a joke. It was very, very ugly. Look at your charts and you'll see and you'll agree. It's just trash right now. So otherwise, have a good night, good morning, and I'll see you when I see you.